Okay, we are recording. It is in progress. I don't know if everybody can hear that or not, but that's what it says in the earphones.
Yep.
Okay, welcome Friday, mid-month, October 15th. Unbelievable. I don't know about you today, Ben, but it's Friday afternoon. I'm feeling good. I'm feeling so good. I'm going to drive out to Lanark this afternoon for a hockey game. So that's my
Nice.
plan. Yep.
Sounds amazing.
Nice way to end the week. So I'm going to be running out of here real quick. So you can see I'm in the downtown studio here. Ben has retreated to his comfy cave in the basement there. So yeah, let's get it going. What do you got for us today, Ben? How was the week?
Good. It was a good week, I think. Lots happening in the world and markets. The last 2 days, the markets are pretty happy. Yesterday would have been bank earnings. Bank of America came out with good, solid earnings. Loan loss is really low. Good positive numbers. I think that kicked off a pretty good rally in broad risk assets. And then today that I guess continued a little bit. That broad equities would have been higher, but Bitcoin really was and has been kind of the story the last couple of weeks. And yesterday, as we headed kind of into the close yesterday, we saw the SEC say they're likely going to approve a Bitcoin ETF in the US, and there's been a lot of them that have tried, but it appears that Invesco and ProShares are going to be the ones that are likely to be approved first. But what I found the most interesting after we talk about the price, which is we've moved back through $60,000 a coin. If you recall, we got down to 27 or so in the sell-off this summer. But as we move through 60,000, but one of the things that was interesting about the SEC is they said they're approving these ones and they're going to approve the ones that trade futures contracts on Bitcoin. So I thought it was interesting. Probably nobody cares about it, but what it comes down to is that the construction of it, I thought would make a difference. You know, the ones that we'd bought a year and a half ago for clients, part of the interesting and then part of the reason I liked it is they actually own the physical Bitcoin. So it's in cold storage with Gemini. So, you know, there's never any risk that like every month when you do a futures contract roll, there's costs every month, right? And so part of why I like the one that we have is you actually own it. So there's no carrying like that. There's no rolling costs and there's no risks, but SEC seemed to approve. They said they like the futures contracts better. They think it's better for investors. I think it's better for the investment banks, maybe why they like them, because there's more revenue for them. But I thought that was an interesting nuance within it. But why should anybody care about this is, well, particularly in the US, is it allows you to buy cryptocurrency in your IRA and your 401k. Like you haven't been able to do that before. So by this getting approved, that really opens that $1 trillion market that is 401k and IRAs. So interesting, worth paying attention to, but that's really caught Bitcoin's caught a bid as a result of that.
Right. So almost back to the all-time high.
Right? Yeah, 65 was the all-time high. So, you know, assuming they approve next week, we probably see that number reasonably. And the question will be, does their buying momentum on the other side of that, or is this kind of a short-term top? So watching that pretty closely.
Yeah, for sure.
Yeah.
Okay. What else we got for this week? What else did you get up to this week, Ben?
Yeah, from a news perspective, a lot of talk about the boosters with the COVID vaccines. You know, people are starting to get their third shot. Your dad's got his third shot. Like these people are starting to get their third shot.
I know, right?
J&J's announced a kind of a booster shot. And so, you know, that'll be interesting to see how that plays out. I'm surprised to see them roll that out before they kind of went down to those kind of 5 to 11-year-olds and kind of worked their way down. But lots of talk about the booster shots happening. And then the last one I want to talk about, which I'm sure when you went to put gas in your tank, you saw that oil and gasoline is pretty expensive. We hit $85 on Brent crude on the futures contract today. That's a 52-week high. So lots of questions around crude and where it's going and price and stuff like that. I think it has a big impact on what's going to happen with Canada US dollar. So I'm watching that pretty closely right now.
Okay, good.
Mhm.
We do have a pretty good crew on here today. So if anybody has any questions, certainly on the bar down below, we got the Q&A button there. We also have raise your hand if you want to do an audio one, or you could just throw it in the chat. Either way, if you have any questions about any of this stuff. I'm actually surprised that, we talk about Bitcoin and crypto almost every week. We don't have more questions because most people don't even really are still unaware exactly what it is, but maybe not. This isn't the forum for that, but we're happy to answer any questions about that. Okay. I know you have some charts, but what did you want to get to next? Did you want to get to those right now?
And let's just hit on a couple of things from portfolio construction first.
Yep.
One position that I've owned for a while, or a good part of this year, is Germany. So had EWG in the portfolio. Looks like the European economy may be starting to peak a little bit here. So earlier in the week, I sold Germany and put 50% into US regional banks. And 50% into small cap value in the US. And so that was a change. I also did reduce half of that US regional banks because it went up 5% since I bought it a couple of days ago, and put the proceeds into the US 10-year because it sold off in the last few days. So fairly active from what's happening. As I've mentioned the last couple of weeks, late cycle still, but we get a flattening yield curve. It's good for the banks. We saw some bank earnings, so banks have rallied here. So I think lots to do from a tinkering perspective. So it should keep me active the next little while. But that's what I did from a portfolio adjustment perspective this week.
Awesome.
Yeah.
And for all of our Hedgeye research, we're still looking at a quad 2, are we?
Yeah. So they said that they expect that quad 2 setup. Still jammed pretty heavily in the middle. Or kind of a little bit in each of the economic environments. But if you look at the present setup, yep, looks like quad 2, not as deep as we saw earlier this year. So I don't think you get the big moves that you would have seen in some of the small caps commodities. I think we're kind of near the end of that. But yes, still growth accelerating and inflation accelerating together.
Okay, great. So any more, anything you want to add to the portfolio construction, or did you want to?
I say maybe we can hit a couple on the charts because there's a few things in there that I think address a couple of the questions around inflation and economic activity.
Okay, everybody's favorite segments, Ben's charts coming right up.
Yeah. All right, let me get it just set up and we'll get going. Start with the fun one and then get into the more heavier stuff after that.
The fun one. Okay.
Fun one.
One of those fun financial charts.
Yeah. You like the fun ones?
I love the fun ones. I love them.
Let's go with here. I don't know. It's not opening here. Hold up. Let's try this again. Having technical issues today.
Yep.
Sorry about that.
Bear with us, no problem. It has been much better since we've gone back to I'm not allowed to say out loud, our platform that we are on, but it seems like more people can get on it, so we have fewer glitches, so this is good. Okay.
Can we see it now?
Thompson up there. Okay.
Oh, so can you see Thompson?
I can. That's not what you want to show it.
No.
Okay, that's one of our trading softwares, everybody. So you can get a behind the curtains look.
Exactly.
Of the things we use.
Yeah. So it has been a lot better since we got here, but let's see here.
Yep.
Screen one share.
If I were a betting man, I would say this was user error.
Definitely
It
user
wasn't
error.
a technical problem.
Can you, are you
Not to throw you under
seeing,
the bus, Ben.
are you
Not to throw you under the
seeing
bus.
the full scene or just
We get it.
that's all right.
Yeah, it's a weird setup, but
It's a
everybody
weird setup.
can
You can still see it.
we can see it. Everybody will get the picture.
All right, that's good.
Yeah.
I don't know, my haven't set up properly, but yeah, interesting. Obviously, this is a multi-pronged one that I'd put up, but it just shows the speed of adoption now with a lot of the social platforms. You know, everybody and their brothers on TikTok, which I'm not on there yet, but I know everybody is on there. So the speed to 1 billion users, TikTok has it took 5.1 years to get to 1 billion users. It just shows you how fast the adoption of new social media platforms are taking place in. I mean, for the conspiracy theorists, obviously TikTok is a Chinese company, so they're getting a ton of data and information happening quite quickly from around the world. So I thought it was interesting to see how fast they got to 1 billion users. That's a lot of people. So that was the fun one. That was the fun one. This is the busy one. This is like chaotic. I know you probably look at this and go, this is crazy stuff, but really wanted to hit on a couple things. And for anyone that wants to get granular and dissect this thing, I can definitely send you that page. But the most important one is the top line to look at, which is headline CPI. So this is the inflation number. And so if we look at where we sit today in the top right hand corner, we've gone back to back CPI of roughly around 5%. And so as I talk about where we're going in Q2 of next year, I say that, you know, the likelihood of us being able to replicate this amount of inflation in Q1 and Q2 next year is pretty low. Q1 coming on the back of 1.9% CPI, we might be okay, but Q2, if inflation's still accelerating at 5%, we got a pretty scary landscape. So I'd say the likelihood of that happening is super low. And so it's not the absolute number that matters, it's the rate of change of that number. So if we get a 4.85% and that comes down to somewhere around 1.25, 1.5, while it's still positive inflation, that's a dramatic decrease in inflation. And what that means is you want to own obviously certain different assets in that backdrop, gold being one of them. So this is a busy number, a busy sheet to look at, but really it's interesting to look at, you know, what happened in the previous quarters. It's easy to go back and look at, you know, 17, 18, 19, and, you know, pair it up. What did the market do when we saw a rate of change adjustment? And so I thought this was a worthwhile slide to pay attention to.
Mm.
If you want it, let me know.
Yeah, little light reading for the weekend. If you want to get granular, we call it getting in the weeds around here.
For the engineers in the crowd.
Yeah. Okay.
And so the other thing that you worry about mostly, so Evergrande's taken a lot of attention. It's the Chinese company, the Chinese construction company that's gone into financial difficulty. And so as you get a lot of different people talking about contagion risk, so that is the risk, right? When an event like this happens, we had Lehman's, we had Bear Stearns. When those things happen, what happened is the system jammed up. There was enough liquidity, things started breaking, options and, you know, CDS and all these things happened. So the contagion fear is, you know, Evergrande goes bankrupt, and then what does that do to the European banks, and does that flow over to the US banks? And so this is an interesting slide to pay attention to. Is there any contagion risk, right? Where we have that kind of, you know, domino effect that starts by a big bankruptcy. And so again, this is a chart to look at. These are all the kind of the spreads that you pay attention to. If you get a big blowout and change in spreads in any of these different categories, it's worth paying attention to and saying, well, maybe something is breaking. And now if something is breaking, now we need to pay attention to the fact that a waterfall sell-off may happen unexpectedly. So presently right now, all clear, quad 2, GDP and inflation accelerating together. But this data and this information is worth paying attention to, that, all clear, no kind of credit risk presently in the system.
Gotcha.
Makes sense?
Does make sense, actually.
That's good. And so the last one is just an additional slide where, as I talk about, we're likely late cycle. This is obviously a very long-term look, a 50-year look at what happens as we go through, longer phase cycles, where a lot of the stuff I talk about is, week by week or quarter by quarter. This is a longer-term look at, what happens as we get past this kind of, as the economy accelerates and we start to move into kind of a higher valuation perspective. This is a signal to pay attention to, that we're probably late in the cycle, as I mentioned. Probably still some room why I think you still want to have exposure to equities and maybe some small caps, but we're quickly approaching the upper end of the band. As you approach the upper end of the band, that's where things start to happen. We likely get a bit of some recessionary data next year. Again, longer phase cycle to pay attention to, but this gives you a snapshot of a historical 50-year look at ebbs and flows of the business cycle.
Right. Great charts this week, Ben. Really good charts this week. They really crushed that chart game.
I did. I gotta figure out how to use.
Yeah.
I gotta figure out how to use the share thing again, and then we'll be all good.
Yeah, we'll work on that next week, buddy. Don't worry about it. I got a great question for you.
Shoot.
How do you take this high level information that you do all this research on, and then boil all that down to see and how that translates to what you're going to buy and sell in people's portfolios?
Yeah.
It's so detailed, that information. There's an endless amount. I know, because I've been going through it as well.
Sure.
But then how does that translate into people's portfolios?
Mm-hmm. Yeah, so portfolio construction is an ongoing thing that you have to think about. And so the art of it is, I suppose, as opposed to the scientific, which is a lot of stuff we talk about, the art is making sure you have enough of these different assets that can benefit but not hurt the portfolio. And so, when I'm thinking about the portfolios, I think about, what do I want to own for the next, 5 years? And then I put some of those things in the portfolio. What do I want to own for the next 2 years, 12 months? And then what am I more comfortable with being a lot more active, kind of that 0 to 3 months hold in the portfolio, and then breaking it down by percentages. And of course, once I've come to that mix, the other tilting would be, what's your risk tolerance? So once we've come up with the different risk tolerances, and there's really kind of 3 that we run: aggressive, balanced, and conservative. And then it's a weighting of those different assets within the buckets. But that's a constant effort to make sure we're keeping the portfolios balanced, at the same time, though, making sure we're positioning for what the market's given us.
Right.
Yeah.
Great answer. Great answer.
Yeah.
Okay, so what do we see coming up for next week?
Yeah, so one of the things I mentioned in the daily too is the last few weeks we've been seeing kind of these huge IVOL premiums on the index, which is mean the market's kind of defensively positioned coming into this week. And what we saw today is that most of that premium's gone, and so the market right now is positioned pretty neutral to maybe a little bit bullish. So I'd expect Monday, Tuesday, or potential reasonable correction, because a lot of those kind of that premiums come out of the market. And so I'd be looking at that, we'll say Monday, Tuesday, to see how the market trades around that. And be continuing to pay attention to the US 10-year bond curve. Right now, I think we finished the day around 156 on the US 10-year, 157, which is right in the middle of the band. So I think we're 140 to 160 here, 162. So if we migrate down to the kind of the 140 range, tech probably does well, where I'd take the opportunity to reduce some exposure there. If that happens, if we creep up to the higher end, then probably wait and be a little bit patient, but I'd expect a little bit of selling next week.
Gotcha.
Yep.
Okay, last call for any questions. If anybody has any, now's the time. If not, what do you got? Anything else?
I had a good meeting with a gentleman, which talked a little bit. He runs a fund called Black Diamond Asset Management. He's been a long time global investor. We had a good conversation about investing in China. He spent some time there, met with some pretty high profile Chinese leaders, which gave me an interesting take on their business, their philosophy, what they think about technology. That was really interesting this week, and we're going to have him on the podcast at some point in the next little while. I know we got a couple of podcasts that we plan to roll out in the next couple of weeks, so that should be good, and we'll make sure we send those out as well.
Yep, we have 3 ready to go. We have one on insurance, one on gold, and what was the last one? Oh, one on NFTs, non-fungible tokens.
Yep.
So those all come out in the next 2 weeks. We got a little backlog there, but we're good.
Yep.
And then we have one for you and I that's supposed to come out today, but it's sitting on my desktop. I just got to hit send. Okay. Awesome. Yeah. All right. That's it. No questions. Everybody's anxious to get to their weekend. I'm heading out to Lanark. You're doing a coach's learning how to be a hockey coach.
That's it.
So, hey, we got a busy weekend.
You got it.
All right, everybody. Enjoy your weekend, and we'll see you next week.
Take care.